Olivia Bono-Voznenko for Modern Wall Street. It's the end of March end, the end of a quarter, and here to wrap it all up with me is Sarge Guilfoyle. Stephen, so we meet again.
We do. It seems like a regular thing now.
Stephen, there's been a lot of economic data, a lot of Fed speakers. Are the two matching up?
Not quite. The data is not really that supportive of an improving economy. We just saw what happened with the Atlanta Fed GDP Now forecast, which is down to 0.6%, which is horrible, but it would be the best first quarter we've had in 3 years, so I guess you can stick that in your hat. The Fed speak, however, has been the manipulative thing. It's been what traders are talking about. Basically, they're massaging the dollar up or down. They're trying to keep it, I think they're trying to keep it around the DXY index, that is, around 95, and try to control other markets through that index and maintain a state of non-currency warfare with other central banks by doing so.
Stephen, are there any opportunities investors can take from this?
Well, yes. I mean, obviously you've benefited throughout the month of March if you were positioned long most equities, or almost every sector is somewhat higher. I think that the impetus here is if they remain as dovish as they sound, and every time the hawks come out, Janet Yellen kind of puts them in their place, and she's quite dovish. Well, I think you can put up pretty much a higher target on the S&P 500. My personal target right now is 2150. I can't promise that, but that's how I'm lining up my positions. That's what I'm trying to get to before I will think about taking something off. In the meantime, I still think gold's a good trade. Gold, although it is a safety device, also benefits from easy monetary policy. We're now in a comfortable spot, say 1230. I don't think you have to worry about taking gold off until it gets below 1210. And if it goes to, let's say 1275 with some momentum, maybe you want to put some more on.
Well, it's the end of the month, end of the quarter. What is the effect on the markets today, and what will we see going into April tomorrow?
Well, we're going to see. There's a lot going on for tonight's close. Right now, you have maybe as much as 50% of the pension funds in the United States that are forced to act right now. You have the monthly rebalancers versus the quarterly rebalancers. And the monthly rebalance right now is more drastic than the quarterly. The monthly is a big negative. It'll probably be a large negative imbalance for the bell tonight, but will be counteracted by window dressers and, let's say, hedge funds, other type of funds that take advantage of these things, because the pension funds are forced to act by the necessity. They have to remain dollar neutral, many of them, because that's the nature of their game. So even when it's not right, they are forced to act, and other funds will try to take advantage. There will be volatility tonight, and there will be high volume.
Wow, we have a lot to reflect on, and thank you so much for wrapping that up for us, and a lot to look forward to. Thank you, Stephen.
You're welcome.